But we now turn our main focus to the European Central Bank, or better known as the ECB. The ECB surprised markets by slashing its interest rates even further. It's a bit to give Europe's struggling economy a bit of a helping hand. CCTV's Jack Barton has more.
After months of speculation, the European Central Bank finally took action.
We decided to lower the interest rate on the main refinancing operations of the Euro system by 25 basis points to 0.25%, and the rate on the marginal lending facility by 25 basis points.
That's a new record low aimed at fighting falling inflation.
What we see is a protracted period, broadly based and protracted period of low inflation. And low inflation, you remember that the objective of the ECB is to have an inflation rate which is below but close to 2%.
With double-digit unemployment and tepid growth, Eurozone consumer spending has remained feeble. The cut to the key lending rate is intended to make it cheaper for banks to borrow from the ECB. The idea being that they will then pass this money along to businesses in the form of loans, which should stimulate the bloc's economy. Economists say the problem is that the banks have not passed on previous rate cuts to customers.
We've had actually many of these pulling out all the stops days at the ECB and in Frankfurt and over the last couple of years. And we've seen that actually the impact on the economy is hardly there.
One way the cuts will help is to lower the euro, something that happened within minutes of Thursday's announcement. This will at least keep exports competitive and help Europe nurture the small recovery it currently has. Jack Barton, CCTV, Brussels.